Accounting equation and Excel. Enter payroll for the second month of our practice problem, part number 1. Get ready and some coffee because we're about to learn the accounting foundation, the accounting equation using Excel. Here we are. First, a word from our sponsor. Yeah, actually, we're sponsoring ourselves on this one because apparently the merchandisers, they don't want to be seen with us. But that's okay, whatever. Because our merchandise is better than their stupid stuff anyways. Like our crunching numbers is my cardio product line. Now, I'm not saying that subscribing to this channel, crunching numbers with us, will make you thin, fit, and healthy or anything. However, it does seem like it worked for her. Just saying. So, subscribe, hit the bell thing, and buy some merchandise so you can make the world a better place by sharing your accounting instruction exercise routine. If you would like a commercial-free experience, consider subscribing to our website at accountinginstruction.com or accountinginstruction.thinkific.com. In Excel, if you don't have access to this workbook, that's okay because we basically built this from a blank worksheet but started in a prior presentation. So if you want to build this entire worksheet from a blank sheet, you could begin back there or just construct your own worksheet as we go, or possibly just follow along with good old paper and pencil. If you do have access to this workbook, though, 4 tabs down below: example, month 1, practice, month 2, example. In essence, the answer key: month 1, prior month of operations. The practice tab having pre-formatted cells so you can practice the practice problem with less Excel formatting. Month 2 tab, the one that we will be working in, has current information where we started with a blank worksheet but are basically working within a template now. However, we will be adding to that template as needed as we go, practicing our Excel tools and formatting as we do so. Let's go to the example tab to get an idea of what we will be doing. Remembering we're basically building our bookkeeping system using the accounting equation as, in essence, our trial balance from which we will construct our major financial statement reports: balance sheet, income statement, statement of equity, noting that good old income statement, sometimes called the profit and loss report. So now we want to think about payroll for the second month of operations. Remembering that payroll in general, just paying our employees, people are going to work for us and we're going to pay them on some type of agreed upon terms, should be as easy as any other expense that we have, meaning similar to paying the utility bill, the telephone bill. We write a check form or an expense type of form, decreasing cash, recording the other side to an expense, possibly automating the process with the help and use of the bank feeds if we have that access or ability using software like a QuickBooks or a Xero. However, in the United States, and I would imagine many other areas, payroll becomes more complex because there's going to be laws and regulations related to employees, and those have to do also with taxes. Remembering that taxes is our hurdle, noting again that basically the double entry accounting system is universal. That's going to mean that the currencies could change, but the concepts remain the same. However, it gets distorted from place to place when we have taxes, which are not universal, but are unique or specific to particular places. So I'm going to be looking at the payroll taxes from the perspective of the United States, but remember that taxes there's no new tax really under the sun. The only question is, what kind of tax is applied to the place that we are in? Is it a sales tax? Is it an income tax? Is it some kind of withholding tax, a payroll tax that we're going to be basically dealing with here? That's what we'll be looking into. Now, quick recap on the payroll taxes, noting that you could pay the payroll taxes or pay people in different time frames. You might pay them most traditionally either weekly, semi-weekly, monthly, or semi-weekly. What did I miss one? Weekly, semi-weekly, monthly, bi-weekly, and monthly. So we chose to do it monthly here so that we're not running multiple payrolls, which are going to be somewhat similar. So we're going to be paying monthly. We're going to have withholdings, imagining we're subject to federal income taxes in the United States, and have a simplified problem related to that. Noting, however, that in practice, payroll is an area that even if you have a small amount of employees, you probably want to pay for some kind of payroll, either assistance or an upgrade on the software of like a QuickBooks or Xero, or possibly hire an external provider that handles the payroll and some of the human resources needs, possibly because of the complexity with it. Whereas we talked before about the sales tax, which is usually somewhat easy still, so you can possibly get away with doing your own sales tax without, upgrading or paying more for it, or even possibly using the widget that often comes with the programs of something like a QuickBooks or a Xero. So we want to keep that in mind as we go through this. We'll discuss those items as we go. We're going to build basically our ledger that we will construct the journal entry or make the payments from over here. So it's going to have the gross pay, calculate the withholdings that we're going to have, which we're just going to look at federal income taxes, and then we'll take a look at our income taxes. And then next time we'll take this worksheet and create a journal entry with it. All right, let's go to the month 2 tab to process this. So what I'm going to do first is I'm going to go up to the view tab. I'm going to unfreeze the panes because we're going to work in a worksheet to the right. So I'm going to go to the right and go to our worksheet. So this worksheet is going to be what you might call a payroll ledger. We did one last week. The next one is going to be much the same as this one. But remember, this is a much simplified ledger because we're only looking at federal income taxes, not dealing with state income taxes, and we're not dealing with other types of withholdings. And we removed the FUTA tax, federal unemployment tax, as well. Also, I just want to point out that there's also caps on payroll taxes on things like Social Security and the federal unemployment tax. That causes more problems. And if you try to do payroll manually, which I have done in the past, you might run into problems if you mess up the cap, and that'll mess things up. That's one area that messes things up. Another area of difficulty is that every time we give a payment to our employee, we have to not only tell them the gross pay, the withholdings, and the net check at that payment with a payment stub, these days having to be automatic or digital because we might not give them a paycheck with a pay stub, but we also have to give them the year-to-date information for how much they've earned year-to-date, right? And so that compilation of the data that we have to format for each employee is going to start to get complex. And we have to format the data in such a way that we can use it to make our reporting forms for the government, which are quarterly reporting forms, typically the 941s, as well as the yearly forms, the W-2s and the W-3s. That amount of reporting is going to cause a lot of calculations and room for error. So we usually have to pay or upgrade our software like a QuickBooks or a Xero in order to get more support to help us to process all that reporting. Even when we do that, we're going to end up with a whole lot of data of processing the payroll because we have to do all of these extra journal entries for the withholdings and whatnot within the system. Remember, your other option is to hire someone else to do the payroll that just does payroll, like an ADP or a Paychex, and then coordinate with them, yourself as the bookkeeper and the tax preparer, which might be yourself or someone else, so that we can then, you do the bookkeeping, and that would mean, what are you trying to do? Most likely automate the bookkeeping as much as possible, making it on a cash basis as much as possible. The payroll people do the payroll. What are they trying to do? Make the payroll stubs correct, process the payroll properly, tell you how much to pay out of payroll or make the payment out of the checking account that is correct, and process the payroll reports that will be used for the payroll tax returns and also be needed at the year end when the CPA or accountant or possibly yourself at the end of the year doing taxes can take those year-end reports and make sure that what is in our system ties out to the W-2s, the W-3s, and so on, possibly doing an adjusting entry to go from, in essence, a cash-based system that we try to do as a bookkeeper to the accrual-based system we're required to have with payroll due to the fact that we have these withholdings that we're dealing with, also making sure that what we reported to the government for income taxes on possibly our Schedule C or our income tax forms are the same. They match, or at least are reconcilable. We can reconcile the difference between that and what we reported to the government for payroll taxes with forms 941, 940, W2, W3. Okay, so those are just a few things to kind of keep in mind, but the general idea of the payroll taxes, we'll just kind of copy this same formatting down below. I'm going to say this is going to be month 2, and we're just going to process payroll. I'll make this red just so my eyeballs will get there. Home tab, font group, we'll make this red, and let's make it red and white. All right, so then I'm going to say this is going to be equal to, and I'm just going to copy the same headers. So I'm going to say this blank cell, enter, and then I'm going to copy that down, and then I'm going to copy it across so that it's pulling the information from that top bit. Then I'm going to delete the zeros that have nothing in it. So I just copied it over, but I did it with a formula, which kind of links things together a little bit more nicely, I feel. Then I'm going to select this bit up top. I'm going to format paint it. Home tab, clipboard, format paint. I'll just paintbrushy that right there. Boom. Format paints it for us. We have the same employees. So I'm going to say this equals the same employee of Atom. I'm going to copy that down, put my cursor on it for Erica. Now we're going to imagine that we paid Adam. He's paid salary, we are imagining. So we're going to say that's going to be the $4,583. If they're paid salary, then it should be the same, every month. Whereas if they're paid hourly, we have the added difficulty of calculating the hourly pay and possibly having to deal with different pay levels for overtime if that's a thing in our location. But I'm going to say Erica is also going to be the same this time, 2,400. And then the FIT, this is the federal income tax, not our federal income tax, not us as the business owner's federal income tax, but the employee's federal income tax. Why are we involved with Adam's federal income tax? Why don't I just pay him $4,583, which we shook hands on and agreed about, and then he pays his own dang taxes because the government doesn't trust Adam. They know that we want the deduction. We want the deduction. They have the leverage over us to make us their little tax collector. And so it's like, all right, we have to do that then. We have to take the FIT. Now, where do we come up with the number for the FIT? I just kind of made this number up, but it would come from the W-4, which would be provided to us by Adam. So we're in a kind of sketchy situation as the employer for the federal income taxes because we have to collect it or the government's going to come after us, but we can't just collect any amount. It's not a flat tax. We have to ask Adam, give us the information necessary on the W-4 form for us to process your taxes. And so we try to do it in a way that we don't get sued or anything. And then the Social Security is usually a flat tax. That's going to be Social Security that we pay in, again, federal tax, but on the employee's wages that's coming out of the employee's wages. And that's for a benefit program, which is more like it's 0.0062 typically. It's becoming more like, and basically I messed this one up when I first did the practice problem. It should be 284, and I did my dyslexic thing and put 248. So I'm going to go with 248 because that's going to tie into my master ledger, even though if it's usually going to be 0.062. So pardon me for that. It's a practice problem, so hopefully that doesn't throw you off too much. Gross pay is usually a flat tax times 0.0145. And so so we're going to imagine this is what we take out of the check. Remember, in real life, you could also have voluntary withholdings, which might include like healthcare. It might include, Adam had a divorce thing, and his wife coming after him, and his ex-wife, and wants to take money directly out of the paycheck to pay her, the alimony or something like that kind of thing. Or Adam has a court case, and he's got in trouble somehow, and the judge wants us to garnish take money directly out of his wages for him and pay it on, and so we have to, and they force us to do it, right, as the employer. It's like, come on. But in any case, or you could have other, eye care and other kind of stuff that might be withheld, but we're going to keep it simple like this. So this is going to be equal to the 4583 minus the sum. You might also have state taxes, by the way, but that depends on what state you're in. And then we'll take the sum of these. So the check. So Adam earned, we shook hands, Adam and us as the business owner, and said, we're going to agree to pay you that $4,583 a month. But then the government, third party, this is an A-B situation. Why don't you see your way out of it, government? And the government's like, no, I want you to collect the money. It's like, okay, fine. So now we've got the 720. We've got to take out the 248 for Social Security and the Medicare. So that means Adam's only going to get $3,549. But he's going to get a benefit from the federal income tax, or he's going to get that or see that on the W-2, which will mean that that's what he paid on the W-2, which he might get some refund at the end of that. Where the Social Security, it's going to pay into the Social Security system, which means that if it's not completely bankrupt by the time Adam is at retirement age, which it probably will be, Adam, don't depend on that. But if it isn't, then he might get some benefit from that and the Medicare again at retirement age. If the Medicare system hasn't blown up, which it probably will considering the way we're going here. But if it doesn't, then he'll get some Medicare at that time. Dang, boomers are taking it all right now. I don't think there's going to be nothing left, but maybe I'm just being pessimistic. I don't know. Anyway, we're going to say this is going to be the 2,400 times, oh, wait a sec. This is going to be equal to the 3,060 for Erica. Same thing. That would be based on her W-2 form. Social Security, 2,400 times 0.062. We're taking her portion of Social Security, $149. And then we're taking the 2,400 times 0.0145, 35 for Medicare. Her net check then is going to be 2,400 minus the sum of FIT, Social Security, and Medicare. And she's like, hey, I need the whole 2,400 to pay the rent, man. That's what we shook hands about. You only paid me 1,856. You robbed me. He's like, no, the third party, we tried to have an A-B negotiation, but the government seed his way into it. No, the government's my friend. They give me a refund. You're the one that took the money. No, they took all the money. They're giving you a refund because they made me take. You don't. And then you get into these arguments, but then you can't say that, or else you get. It's a violation of the government's policy to tell them that you actually had to pay. No. Anyway, so then we're gonna say this is gonna be. Let's do a check figure out here. So we summed this up this way. Oh, what is that? I don't know what that did. Que paso? We can also double check this by saying as though all of our employees are one employee. This is going to be this minus the sum of FIT, Social Security, and Medicare. So this is a double check kind of figure. So note, if we do this bookkeeping in our accounting system, we'll have to have all the detail of every employee, their gross pay and their net pay, not only on a pay-by-pay period, but on a year-to-date period for all of our reporting needs, which adds a lot of data into the system, like more than you would think at first, right? Whereas if we have someone outside doing the payroll, like an ADP or a Paycheck, I'm not advertising for them. Those are just some of the larger ones that are out there. Then they could do all of that, and we can possibly enter it into our system with simply a journal entry, which we could just do one journal entry instead of like one per employee. Although we need to be careful that this net check is hitting the checking account and therefore needs to be reconciled in some way to what actually comes out of the checking account with a bank reconciliation. So if we put it in there as a journal entry, as a one lump sum type transaction, then we might want to have a separate payroll checking account, transferring money into the payroll checking account just so that we can process the payroll and that be our normal process so that we can make sure that we can reconcile this amount out. Easier to do if you have a separate payroll account that just has payroll in it, as opposed to as opposed to something coming out of your checking account because you have all these other transactions happening there. Sometimes people do that as a kind of internal control, remembering you want to get the payroll correct because the payroll is where you're most likely to run into problems and if you have a disgruntled employee, or even if it's most likely that's where you're going to get sued or something. And so you want to make sure that everything is on the level. This is not where we want to be shortcutting. This isn't a tinkering situation. This is a measure twice, cut once. That's the adage. It's not like a tinkering until you get there thing. It's like, no, measure twice, cut once, like you're cutting wood for a door frame. You don't want to just cut it too much and then figure that out and then try to glue it back together. That's not the way to do it. Figure it out, get it right the first time. That's what I'm saying. All right, I'll stop. I don't know why I'm getting all upset on that. Let's format paint this one. This is going to be Home tab, format paint. And we'll format paint this one down here. So now we also have our taxes we have to pay over and above. Not our income taxes, our payroll taxes. So in other words, we have to match the Social Security and Medicare. So now we agreed to pay Adam $4,583. We only paid him $3,549. We had to take this out of Adam's check, but we don't get to keep it. We have to pay it to the government, but it really wasn't our money in theory anyways. It's Adam's money that the government's forcing us not to actually give to Adam because the government wants to get their hands on it without Adam getting his greedy little hands on it. But over here, this is what we have to pay over and above what we agreed to pay Adam on the expense to us, which is payroll expense, which is income to Adam. So now we're paying taxes on the expense of payroll, which is kind of annoying, but that's that's how it works. That's how you do it. So we're going to say we're going to pay our portion of the tax, and then the total, we'll sum it up, equals the SUM. And by the way, we would also have the federal unemployment tax, FUTA. People love when I say FUTA in my classes. The FUTA tax is going to be here typically, but it's a smaller bit. Even though it's a federal tax, I'm not going to deal with it right now. So equals the sum. I could double check this going this way. And so there's our taxes that we have to pay. And so we're going to put that into the actual payroll tax account expense, as opposed to these taxes that we have to pay, but we're paying it on behalf of the employees. So that's going to be part of gross pay. And the payroll expense, and this is the only part that's going to be in the payroll tax expense that we might break out separately. All right, get it straight. People get that confused. And so you can tell them how it is. And that should help you. But oftentimes when you tell people how it is, I find they actually get mad at you. You might be better off sometimes to record it incorrectly, just be like, just to not, but no, it has to be right. You don't understand. You're gonna mess up the schedule. If you do it like that, you're gonna mess it up, and everything's gonna fall apart. No, they say, no, okay, let it go. Oh my God, I can't believe they won't listen to me. It's so, so we're gonna take the FIT and then the FIT. So the total payroll liability is gonna be Social Security and Social Security. And we're gonna have the Medicare and then the Medicare equals the sum of all of this. Okay, so let's put a underline here. So that means that we'll do a journal entry next time, and after we pay the employees and take the money out, which we can think of as one journal entry, we're gonna take this money out of their paycheck, but we're gonna have to pay it to the government, and then we're also gonna incur a liability of taxes of this amount which means that we're going to be holding on to their money and the amount that we incurred as payroll tax of this amount, $2,076, which will be a payroll liability, which we will then pay to the government at some point in the future.